very much for the opportunity.
Thank you so much for joining us. So, you're a doctor by profession. You studied medicine. You worked with Narayana, you worked with Fortis. After that, you became an investor. So, what motivated you to sort of change and go towards to become an investor from being a doctor?
Yeah, so I guess the question that's always asked is what motivates you to be crazy enough to do stuff that I do. It starts off as part of the journey that one has inculcated. So I'm a critical care physician by training and spent about 20 years of my life doing medicine and ICU care.
It's a long time.
So 10 years in the US, and then I came back in 1999 and as you rightly pointed out, joined Dr. Devi Shetty in Hrudayalaya. And the first 4 years of my life I was a complete doctor, running ICUs, running stuff with him. And then I realized that there was a larger canvas out there, and increasingly the market dynamic was changing, where it was important for doctors to understand business. And unfortunately nobody teaches doctors business. We end up with reasonably large egos, but very poor understanding of P&Ls. And that led to the next transition of joining hands with Fortis, and I was lucky enough that they offered me a position by which I could be a doctor and become an administrator.
Okay.
And in some ways I call it one of the best paid MBAs of anybody's career. The role at Fortis, and I stayed for 5 years, 2003 to 2008, was all encompassing. Did a host of things, from a small 50-bed hospital startup in Amritsar to taking over and renovating a trust hospital, to being part and leading the M&A drive that we did at that time, which included Escorts and Wokhart, learning the diagnostics business in SRL, buying pieces of land, initiating projects, clinician engagements. So the role changed pretty dramatically over the course of many years, and finally ended up as me running the P&L of various hospitals. 2008 was the period where I realized that either I continue on a track at Fortis as an admin guy, or I move on and become a bit more business savvy. And that's where the opportunity was created at Religare, where the role at that point of time was to support all the non-Fortis healthcare businesses. So I just mentioned those to you: SRL, wellness, health insurance was just coming up at that point of time, M&A opportunities that we were looking at. And then interestingly the Milestone Religare opportunity came up, where as you may remember, Milestone and Religare came together as a JV. Ved Arya was anchoring the whole Milestone piece. I was responsible for the Religare piece. So we put together the strategy, got the fund up and running, got the funds in. We raised 430 odd crores at that point of time. And then worked with the team in investing.
So with Milestone Religare, it was anchored by Mr. Ved Arya.
Correct.
It was a very personality-driven PE fund. So when that tragic accident happened, what were the thoughts that you had? Did you find yourself lost as to now how to move forward?
So Ved's demise was a sentinel moment in many ways. One, it makes you realize the vulnerability of what you take for granted, and number two, you also realize is that when you put up a platform which is very person centric, you end up taking those kind of risks that we saw. Now the way the relationship
so
at work,
kind of a lesson in a sense.
Yes, it was, and in some ways it also made sure that we would going forward make sure that we would empower and create teams which could stand on their own ground. The good part is,
are you trying to bring to Quadria perhaps?
Without a doubt, the art of creating, sustaining and autonomizing teams is the key to, at least to my mind, for success in any business. So Ved's demise, while it was a huge loss personally and professionally, the transition wasn't as traumatic because we just continued with the work. And over the past 2 years, we were very supported with the family, which was looking at various options of what they wanted to do. Until earlier on this year, an option came up where both Milestone and Religare were kind enough to agree to sell their stakes out to the Quadria platform, in their belief that we would make sure that we take care of the investee companies. We'll make sure that we take care of the interests of the LPs, and most importantly, we'll make sure that the team continuity gets maintained.
But while you were with Milestone Religare, you decided to start Quadria Capital. So in a sense, if I can understand this right, you were the face of Religare, Mr. Arya was the face of Milestone, Mr. Arya's demise, and then you are in a sense left at the leadership position, and then you also leave and you start Quadria. Now you have two leaders gone, so how did the promoters sort of react to it, both from Milestone and from the Religare side?
Now that's a great question, and that's where I think it's very important for me to point out the support that one has received over the years from the Religare and Fortis families. Fortis initially and then Religare after that, where I don't think the integrity of whatever you set up is ever in doubt. So what I had always maintained was the following, that the way the private equity business was changing, you needed to be independent as a team to be successful, especially in external fundraising. Okay. And that was a point that was very well understood by the Religare family. I'd also ensured the fact that regardless of whatever we do, I would continue to devote a decent amount of my time to making sure that the Milestone Religare platform does not dissolve.
Did you have an understanding that you'd probably later on buy out Milestone Religare when you were starting Quadria?
In hindsight, it looks like that, but actually there was never any discussion. What I had committed to was that I would spend 20% of my time on the Milestone Religare platform and devote the remaining 80% to Quadria. But as time went along and with the team evolving the way it was and the limited success we were beginning to enjoy with Quadria, it was just one of those one-off moments where the Milestone family was keen on divesting. They were looking at an exit because this, unlike the real estate portfolio that they have, this was a very domain-specific portfolio which required some amount of expertise to make this work. And Religare then thought about it, and as you know, Religare has a very large global asset management business with Northgate and Landmark Capital amongst others, and for them it made sense to hand it over to an individual who has incubated and seen it through, which was going to protect their LP interest and making sure that we don't rock the platform. So
but also what's interesting is that when you decided to form Quadria, not only did you get a support from Religare, Religare was actually a cornerstone investor.
Correct.
So it's very interesting to see that, because in a sense you're leaving, you're going away from the Milestone Religare family or the Milestone Religare JV, and you are in a sense you are being supported by Religare to start your own venture.
So one of the core DNAs of Religare, and in the numerous years that I've been associated with this, has been their support of entrepreneurship. And even if you look at the core businesses that exist within the Religare businesses, I think the CEOs of the individual business are extremely autonomous and get an extreme amount of support from the promoters and the board. In this particular case, I think we were able to convince Religare that by becoming a bit more entrepreneurial and with their support, we could create a much larger platform which would go beyond the smaller platform that we had created into a much larger franchise, which could become meaningful to the larger global asset management business. Okay. So I think it was in many ways a synergy of ideas, and not once did I get any pushback talking about we can't let you go because you're integral to the process. I think the firm has a huge belief that they incubate talent and they're happy to see people succeed.
So that was the professional side of it. What about the personal side of it? I mean, when you decided to become an entrepreneur after having worked as a doctor and in the corporate setup for so many years, how did your family react to that? Were they nervous that now you are, in a sense, leaving a position where you are quite established and you will again, in a sense, start from scratch?
I have been taking all kinds of risks through my career, so they've gotten used to the fact of this guy jumping in, going to the US, coming back, moving on, moving from Bangalore to Delhi and now to Religare. I think they got used to the fact, and as long as I was convinced that that A, you were doing no harm, and B, you were trying to create a much larger vindication of what you wanted to be.
To sort of leave a very, very established setup and to start something of your own does not guarantee a certain amount of money coming in your bank account every month is actually nerve-wracking for a lot of people.
I come from a family of academics. Never had too much money and never had too many business instincts. I think the stability comes from your parents, where you do realize that if you're well educated, you'll always feed yourself.
Okay.
The second support comes in from your family when you know that they back your gut and will support your professional instincts. And lastly, you rely on a close set of people as friends who you trust implicitly that they would give you advice and speak their mind. And I think if you have that core set of people around you, it doesn't sound as dangerous as you made it sound.
It is in a sense dangerous because there is always a chance of things not working out than being in a company where things are going pretty well. But yeah, it doesn't sound as easy as you make it sound also. So when you started Quadria, how was it? I mean, you started a PE fund, Quadria, from scratch. So what was the journey like for you?
So the way we did it was a step-by-step process. As I mentioned to you about the Milestone Religare relationship, got the understanding of how the private equity, the fundamentals work. At that point of time, we had already started executing some deals for our principal fund, RHC, which we were executing in Southeast Asia, which Abrar and I executed. Abrar and I had known each other for almost a decade. Him as a healthcare investment banker, me as a quasi investor. And I think it's important to.
Conversation, Mr. Abrar.
Yes, so Abrar and I spent many years
just thinking that
just talking.
We can do this, we can start something.
No, we spent many years talking.
Take you to actually make up your mind.
So I think we first spoke about it in 2009, but by 2011 we were pretty sure that that's what we wanted to do. And I think it's very important that we spell out why we want to do it. All right.
What was that pivotal moment, that pivotal meeting where you just said, okay, now it's decided, now we're going to go ahead and do this?
Yeah, I don't think there was that moment, but I tell you, it was a conversation which stemmed around the fact where we realized that our intent was similar. And the intent is the following. Both of us are extremely passionate about Asia. We believe that the fulcrum of growth of the world is moved from the west and has come back to the east. Number two is that the problems that we see across the region are remarkably similar. The language, the country, the cuisine may change, religion may be different, but the problem is exactly similar, where public spending on something which is so basic and integral as healthcare will never be enough to mitigate any of the problems. Okay. And lastly, a firm belief that there is a huge host of small and medium enterprises with very strong promoter skill sets and entrepreneurs who basically require the right backing to succeed.
You founded Quadria, and then you started your first fund.
And then we started our first fund, taking over the relationship that we had over the past two funds, which is Milestone Religare and RHC Principal, and we decided to put this together. Okay. By now, we had already had some discussions with the potential LPs, got a sense of what they would like or not like. RGAM had come in as a cornerstone investor.
This is the second fund, the first closing of the second fund.
This is the first closing of the first fund under the Quadria banner.
Okay.
Milestone Religare, technically because we own it now, is the first fund. This becomes the second fund. Okay. But for an Asia capital raise, this is the first fund.
Okay, so Milestone Religare becomes the first fund because you bought
Correct.
Milestone Religare.
And I have been part of the.
But you bought Milestone Religare before you raised this current fund.
So we were concurrently raising it while we were doing the deal with Milestone Religare.
Okay.
But
so the Milestone Religare has been bought by this fund that you're raising right now?
No. So this has been bought by the India arm of Quadria, and then we have the Quadria Asia arm, which is based out of Singapore.
Okay.
So the Indian entity owns the Milestone Religare piece.
So the capital that went for the Milestone Religare deal, where did that capital come from? Did that capital come from the fund that you're raising?
No. This has nothing to do with the fund that we were raising at that time.
So where is that capital come?
So that's come from our personal resources.
All right. So now you've raised your second fund, first close of 107 million.
Correct.
At a time where the PE sentiment is cynical, I would use very lightly over here, because you can't see great exits in the last few months at least. There is a cynical macroeconomic environment, and you're not a sector agnostic fund. You're only focused on healthcare. There are a lot of factors which would make it extremely challenging for you as a private equity player to raise money. How was it to raise capital?
So Lohit, upfront, the fundraising environment is reasonably brutal right now. There is capital available, but the capital is much harder to access. So the euphoria of fundraising in the 2007, 8, 9 era is gone. And clearly now you are dealing with a usually very smart LPs, but now overly cautious LPs, wanting to do a lot more diligence, understand your investment thesis, your hypothesis far better, and spending a lot more time. So the gap between conversations and actually deal making is a long one.
So walk me through about how you used to pitch to your LPs. What did you tell them? Why should they give you money?
So a couple of things, and we've been reading too much into the doom and gloom of the macro sentiment, and it's interesting reading newspapers of how they swing between weeks of euphoria and pessimism. Our belief is actually pretty simple. Our belief is we are focused on a core theme, which is as core infrastructure as possible. It's as big as bridges, ports, airports, and roads being built, electricity being provided. We believe healthcare and education are pillars of infrastructure which you don't see immediately, but you will see 5 to 10 years down the line. The second good part is there is no government out there which does not believe that these are needed, whether they have the resources or not. And the third is that we are dealing with a population in the canvas that we are talking about, almost 3 billion people. You can't wish it away. Lifestyle diseases, the plethora of epidemics, what needs to get done, create a whole ecosystem. So our pitch to LPs is remarkably simple. Asia is not going to go away. The rise in population is going to lead to a huge demand. Lifestyle diseases, so diabetes, hypertension, kidney diseases are an epidemic. And the bad part, if you're a patient, if you're a diabetic, is A, you become a diabetic for life. You need a whole ecosystem built around you, from drugs to doctor to diagnostics to testing to hospitals. Everything needs to come through. And these kind of diseases, and you're reading the newspapers, there are 250 million odd hypertensives in India. Those will continue to grow. We understand the market. We've been here. We've demonstrated to you in the past that we can do all facets of this. If you do believe as an LP that you're interested in healthcare as a sector, not healthcare as one of your portfolio companies, but healthcare as a portfolio sector, please talk to us. So we narrowed the LP base down to a group of individuals who understood healthcare, have invested in healthcare in the past, and then willing to take a punt on us.
So you've established 3 things. You've established the demand for healthcare. You've established your competency because you've been in the field for a very long time. And you've established that there is scope for investment, and it's going to grow. But there's a far big, and the fourth thing is that you did was you narrowed down the LPs and you concentrated on the LPs who were only going to focus on healthcare. But there is still a bigger, larger question, which is of exits. Even if you do find a potentially great company and you invest in that company, right now the problem is that companies are doing really well. They're not getting exits, which is making private equity players nervous. So are you nervous that that could be you, let's say 6 years, 5 years down the line, or 7 years down the line?
I guess one of my key problems is that I'm an eternal optimist. I believe that if you create fundamentally sound businesses based on good governance, and at the time of entry you establish the framework and the guidelines with your partners, which in these cases are promoters. When it comes to the harder conversations around exit timing and modality, these conversations become much simpler. So number one, we are strategic investors. We are not financial investors. That's the first thing that I tell a company. Number two, if you do believe, and I lay it out for you, and I'm talking to you as a company, I lay out for you what are the 4-5 things we think that we found out in diligence that we can work with you. Okay. Let's join hands, let's agree, and let's agree on it on day one so we can implement it.
What are those 4-5 things?
So if you're doing a diligence on a company, I usually come across things. The usual things that you find out in a company is that you'll find out that while there's been a lot of focus on revenue, profitability usually takes a hit. Number two, a lot of entrepreneurs are in too many projects at the same time without narrowing down the focus on what they should really focus on, because somehow in their heads the scale and reach has become far more important than looking at profitability.
So you tell them that if you're in healthcare, then you should be in healthcare, you should focus?
My view is that you should become more regional.
Okay.
You should have show contiguity.
Okay.
You should be able to scale up networks.
Would you be then backing regional or backing entrepreneurs who would say that, hey, we want to be great?
That's our DNA. That's exactly what we do.
Okay.
Our belief is that you need to become a regional powerhouse before you attempt to become a national one. Then you become a national and then look at international. That's the gradation of the steps. And our job is to take you as a successful standalone hospital and make you a regional powerhouse.
Okay.
Once you become a regional powerhouse, then you have 2-3 exit options. You may, if you time the markets well, do the usual IPO story. But more importantly, you become very attractive to larger strategics who are looking at expanding scale and are looking at size. When I keep talking about the West moving to the East, what we are not seeing today, which I know will happen in the next 5 to 6 years, yes, the larger West companies which are stagnating at 1, 2, 3, 5% growth, the HCAs and the Tenet Healthcares of the world will be forced to come into Asia.
Okay.
And that's what's going to change. So strategic play is really going to increase.
Okay. So it's a very positive plan that you have, but I'll just add a little bit more cynicism again. So there are two things as an investor which I want to understand if A, it worries you, and two, how are you tackling with that. So the first is you have no control over how the macroeconomic scenario works.
Correct.
Also how the politics of the country works. And the other is how the money comes in the country. These are two things you do not have a control over. So when you are investing in companies which are doing good, but there's a sharp, cynical macroeconomic environment that in a sense limits your options in a very significant way, especially when the money is coming from LPs, investors who would want their money back.
So one thing which you rightly pointed out is I can't lose any sleep about things I can't control. So if the rupee decides to dive deeper, there's nothing that I can do about it except for to have enough models that we look at in our worst case scenarios. But having said that, I am less and far less pessimistic about what I feel about India going forward, and it's not just India, about Southeast Asia. You're hearing all the doom and gloom about Indonesia, and you're hearing of stuff happening. At the end of the day, I think economies, especially the sizes that we are talking about, are going to fix themselves, and they do. With all the pessimism about over-regulation by government, again, instead of dealing with telecom spectrum, I am dealing with lives. And I do believe that there is always sincerity when it comes by governments into looking at what is pragmatic.
Okay.
So far, in all the investing that we've done for more than a decade, I have yet to come across a rule which is so prohibitive for me to either invest or exit. Now, I'm not saying it's easy. And I'm not saying it's something that
You make it sound easy, but I'm sure it's not.
It's not. But I think
eternally
you look at the right size, and I'll give you an example. Even if you were to look at the macro picture over the past 2-3 years, please look at the multiples that healthcare companies are trading at or deals are being done. I haven't seen a dip in deal making. Number one, I haven't seen a dip in valuations. They're not crazy, but they are not cheap either. And it's a matter of still going out and unearthing good quality companies and working with them. So, especially in healthcare, I do believe whether it's on the pharma side or the medtech side or in healthcare delivery, I haven't seen very cheap deals as in being distressed, and I haven't seen anybody being so strapped that they have not been able to exit. Now, whether it's through the secondary market or it's through a strategic state, deals are still taking place.
So it's very interesting you mentioned rupee, because I wanted to understand that in this fund, the capital that you've raised is
It's all US dollar.
It's all US dollar. Now you are looking at rupee dipping. When the exits happen later on, the money again has to go as US dollar back to the LPs.
Correct. So Lohit, we are in a 5-6 year cycle. Right now for us, we're raising money and investing in India. It's a good time for us to do so.
Absolutely.
We do hope to catch the upturn.
It dips even more later on.
We don't think so. We think the fundamentals of the economy. No, so remember, we are playing on a consumption story. At the end of the day, large economies, and again I'm going to stay focused on the ASEAN countries. So the countries that we are focused are India, Bangladesh, Sri Lanka, large populations, Indonesia, Vietnam, Philippines, Thailand, Malaysia, again large robust economies, where while the macro and there could be a temporary plunge in the currencies, and it depends a lot on what all is happening there politically, but fundamentally the consumption story doesn't change.
Okay.
So we will need to time our exits, we'll need to watch what we do, but I'm less worried about the whole hedging risk, because I think all currencies will reach a certain level and stabilize, and we just need to factor in our models and a return analysis on the broad bands.
In a sense, you've done certain amount of hedging already.
Correct.
Because you're not positioning yourself as an India-focused fund. You've positioned yourself as an ASEAN-focused fund.
Yes.
Do you think it would have been very difficult for you had you positioned yourself as an India-focused fund which invests in healthcare to your LPs?
I think yes, it would have been very, very hard in the current macro sentiment to be trying to raise money to come into India. Having said that, I've seen a bunch of competitors raise money. It's less than before, but they are raising money. But there was a fundamental belief why we based ourselves out of Singapore, and the rationale was pretty simple. We are an Asian fund, and we believe very strongly that we need to be in a geographical location which is not just 3 hours of flying distance from any of the countries that I just mentioned about, but also provides a very strong financial framework which people would aspire to. So we are MAS regulated, we conform to a huge amount of regulations, but I think it also gives the platform a lot of stability when LPs are looking at us.
But in a sense, India is your core market. You were telling me that with 300 million is what you are actually looking for your total corpus of the fund, and which could result in about 6 to 7 deals roughly.
Correct.
2 deals would be in India, 2
Yes.
would be in Indonesia.
Yes.
So you are, in a sense, you will be focusing on India and Indonesia.
Correct. So 30% of our capital will go into India, and the remaining 70% will go outside. So India will continue to be a focus area for us.
You're aiming for a $300 million fund. Do you think this region could actually be relevant for larger players of, let's say, over 500 or 700 million?
I think clearly, if we hadn't hit the roadblock that we did over the past 12-18 months, clearly this region was heading for much higher targets.
But it took you some time to raise this capital. It was challenging for you.
So 12 months from when we started, last July, to when we reached our close.
The first few months, in a sense, demotivating by the kind of responses you were getting from LPs. What were their main concerns?
So we have some very good dialogues with a host of people who, while liking the story, were waiting for us to actually raise capital, and are looking to see if we can pull off a deal or two, which will give them the comfort that they need.
Was it an optimistic feedback that you got from the very start?
Now that we're sitting on a first close, I would say yes.
No, but when you were
when we were starting off, you go through the usual trials. But I think, as I mentioned to you,
did not work out. Were they off-putting for you?
That's always a challenge in this environment where you think you are having a pretty good conversation. You spent an enormous amount of time with a particular institution, and then they need to back out for reasons which are beyond their control. So we were, for example, in discussion with a very, very good named LP who I cannot name.
You presumed my question before.
Yeah, so we ended up reaching the stage of board approval. So the investment team was very keen, and at the board they got into a philosophical debate around whether they should invest more capital into Asia or put more money into Africa. Now those are the kind of scenarios that you can't control.
Right.
They are that's got nothing to do with Quadria, nothing to do with us as a team, nothing to do with the capability of the investment team on the other end. It's gotten into a completely different loop, and this was almost 8 to 12 weeks of work.
So when you were told that, sorry, Dr. Varma, it's not going to happen, did you actually think, what am I doing? Why am I doing this? I should.
No, you suck it up, you move on, and you start off a new day.
So is that how you tackle failure, even in a small, temporary setback? Is that how you tackle it?
I mentioned to you I've been ICU doctor for 20 years. I've been dealing with life and death. At the end of the way, there's always a perspective, right? This is about an LP not coming in. And having dealt with life and death on a daily basis, it seems very small.
Is it as harrowing an experience to be a private equity player, as stressful?
I think the stress levels are significant. Yeah. But having said that, the need to be able to do good is all personifying. So I don't think it's I don't know whether the stress is different. Stress is stress at the end of the day. Once you've been doing medicine for 20-25 years, what happens is that you start taking a lot of calls, which is based on your experience. Here you need to be cognizant of the fact that your decisions impact a lot of people, and it's not just your team and the families, but your investee companies which have a huge employee base. So you need to be very careful about who you are, what you do, and as long as the intent is to do right, you will make occasional mistakes, but that's life.
You have to be very tough, and also you have to take very difficult decisions at times.
Yeah, at the end of the day, you do have a fiduciary responsibility. And you want to do what's right, but I think as long as you're right about this, you're good.
Is there a connection now in Quadria, Religare and Fortis? How are you, is there a synergy between you and Religare and Fortis?
So we wanted to ensure the fact that there is no conflict of interest. So even in our documentation, we are quite clear that we cannot invest in any Religare or Fortis companies. So we've said that up front.
So you will not invest in
We will not invest. Okay. And number two is that we made sure that there is no conflict from the erstwhile of Fortis and Religare relationship, because they're not part of our board, they're not going to be part of our investment committee, and we modeled ourselves completely independent.
But you've personally been very close to the promoters of Fortis.
I have been very grateful for their support and advice, and in a personal capacity, one is always grateful to get insight. But there is no professional connection at this point of time.
I wish you all the best for the final close, and I wish and I hope that your investment in healthcare and in your partnership with the healthcare players stays significant, and you achieve the targets that you're looking at. Thank you so much.
No, thanks very much for your time.
Me your time at VCCircle.
Thank you.